Morning, I'm Tom Elliott. It's Tuesday, 15th of February, and this is my market report. Well, the Dow Jones Index has firmly established itself back above the 12,000 mark, a level it hasn't seen for some years. Now, US stocks have been buoyed by two things. One is economic optimism. Now, President Obama brought down a budget last night, which really should give people cause for thought, because he said that out of 3.73 trillion in annual budget expenditures, the most extraordinary sum of money, they're going to make cuts of $1 trillion. Now, I thought initially reading this, A, that's very deep, and B, that'll be good. But the problem is, of course, he can't do that in 1 year. That'll be far too big a lump of government expenditure. So the budget cuts are only going to take place over 10 years. And of course, President Obama, even if he wins a second term, will not be in power in 10 years' time. So the market was flat last night, but people are feeling good. They do think that the US economy is starting to improve. And of course, the relaxation of tensions in the Middle East with the relatively bloodless coup in Egypt is helping sentiment. And as a result of that, oil prices are falling, because oil prices go up when tension in the Middle East goes up, and they go down when that tension recedes, if it recedes. Only time will tell whether or not the events in Egypt prove to be relatively benign, as people are currently hoping. We're in the middle of a reporting season here in Australia. As Dad and I talked about in our general report this morning, Foster's reported a fairly disappointing half-year profit of 336 mil, 15 to 20 mil below most analysts' expectations. However, the company said it is on track to pursue its demerger of the wine and beer businesses, and many analysts think this will lead to a takeover of one or both of those businesses. SAB Miller is touted as the most likely buyer of the beer business. As far as Insurance Australia Group goes, now it announced a fairly disappointing profit yesterday afternoon for the first half. The stock fell around 20 cents from 383 to 363. It's down another 3 cents this morning. IAG is blaming in Australia the floods, which is fair enough, I guess, but they're having a terrible time with their British business. This was bought about 4 years ago, and all it's pretty much done since then is lose money. Pressure is growing on the chief executive of IAG to ditch the British business, and in that sense he's not alone, because companies like National Australia Bank have the same issue. Underperforming European assets, bought at the wrong time, now very, very difficult to sell. ASX shares, that's shares in the stock exchange, are stronger this week. Last week we learnt that it was not alone in potentially pursuing a merger with the Singapore Stock Exchange. Overseas, the London and Toronto stock exchanges looking at tying up. And would you believe it, Deutsche Börse, which is the German stock exchange, and the New York Stock Exchange are also looking at merging. What this says is that we're going to have fewer, larger and better capitalised stock exchanges around the world. And it would make sense for the ASX to do a deal with the Singapore Stock Exchange, or possibly the Hong Kong Stock Exchange. The big problem, as usual, is political interference. Both the Greens and some of the independents have said they're not keen on the idea of Australia selling a national asset. The risk is, of course, if we don't do some sort of retire a national asset in the stock exchange, could become something of a financial backwater. I mentioned that oil was down, and as a result, share prices in Woodside, Santos and Oil Search also weaker. But of course, that has a flip side. Oil being cheaper should keep a lid on inflation. And to that extent, over the weekend, RBA Governor Glenn Stevens came out and said that he didn't see interest rates going up again anytime soon. Now, fruit and vegetable prices are going up, electricity prices are going up, but clearly the RBA is sufficiently worried about the economic impact of the floods that it doesn't want to raise borrowing costs for Australian consumers in the near future. Having said that, if inflation stays above 3% per annum, rates will rise, and I still think they'll be 50 basis points higher by the end of this year.